Most AI trading videos go the same way. Ask for a strategy, get Pine script, paste it into TradingView, run the backtest, hope it's profitable. The model never actually looked at the market first. It pattern matched a strategy out of everything it's ever read and handed it over with total confidence. Today, we fix the order of operations. Claude gets a real market data tool through MCP, and the rule is simple. It has to research the market before it writes a single line of code. Then the strategy has to survive an actual TradingView backtest, critique itself, and earn exactly one shot at a revision. One market, one time frame, one strategy, one revision. By the end, we'll know if the tool access actually made the strategy better or just made the process look more sophisticated. Every prompt I use on screen is in the companion guide in the Discord, ready to paste. Let's go. One thing before we start, and I mean this. Everything here is educational. Every result is a historical backtest, and none of it is financial advice. Step 1. Get Claude something real to look at. Install is one command, pip install TradingView-mcp server, then a few lines in the Claude desktop config file. Restart the app completely. A refresh won't load it. MCP servers only initialize on a cold start. Now watch the first prompt, and it's not build me a strategy. It's tell me exactly what this tool can do. Available market data, timeframes, how far back the history goes, which indicators it can compute. And the instruction that matters most in that prompt is the last line, do not invent capabilities. A model with tool access will happily describe something it never fetched. So before anything else, make it inventory itself and name real tools instead of generic ones. Once that comes back clean, we're ready to point it at a market. Step 2, and this is the step the whole video exists to test. Before Claude is allowed to design anything, it has to describe the market using data it actually pulled. And the prompt says it outright, do not design a strategy yet. Leave that door open even a little, and it skips straight to writing code, every time. Trend first. Is price above or below the higher time frame averages, and does that read agree across the daily and the 4-hour chart? Momentum next. RSI level and direction, confirmed or contradicted by the MACD cross. Then volatility. Bollinger Band width, relative to its recent range, expanding or contracting, because that alone decides whether a breakout system or a mean reversion system even makes sense right now. Then structure. Recent swing highs and lows, and any candlestick pattern the tool flags at those levels. Step 3. With the research in hand, Claude commits to exactly one strategy family, and it has to justify that choice against the regime it just found, not against what sounds impressive. Trending, moving averages rising, momentum confirming, that's trend following or pullback territory, something like an EMA cross or a super trend flip. Tight range, contracting volatility. That's a setup for a breakout once the range expands. A Donchian channel or a Keltner band. Strong directional push led by RSI or MACD. Momentum. Price stretch to the edges of the Bollinger Bands with no trend behind it. Mean reversion. 4 regimes, 4 families. Pick one. Before any code, the full spec gets written out loud. Entry rule, exit rule, a stop that's either a fixed percentage, an ATR multiple, or tied to the last swing low. Take profit or trailing logic, filters, position sizing, and the exact condition where it stays flat and takes no trade at all. 3 to 6 rules, no more. If a rule can't be written as a comparison between two numbers, it's not a rule, it's a feeling. Send it back. Claude converts the spec into Pine script using strategy, not indicator, since an indicator script can't place a trade or report performance. Before it goes anywhere near a chart, read the code against the spec line by line. Models quietly simplify rules that are annoying to code, and this is where you catch it, not after the backtest. Now the part that matters. Paste the script into the Pine editor, add it to the chart, open the strategy tester. This is the first real evidence in the entire video. Everything up to this point was Claude talking. Net profit is the least useful number here. Profit factor is the one to watch. Anything close to one is fragile. Max drawdown decides whether the strategy is actually survivable. Win rate means nothing without trade count next to it. And the equity curve matters as much as any single figure. A strategy that's flat for months and makes it all back in one trade is not the same as one that grinds up steadily. High return with a huge drawdown isn't a good result. It's a leveraged coin flip. A high win rate on 5 trades isn't evidence. It's a small sample. Step 5. The part that decides whether this whole setup was worth building. The results go straight back to Claude, and it has to critique its own strategy. Not, is it profitable, but profit factor, drawdown, win rate, whether the trade count is even large enough to mean anything, and whether the result depends on one lucky stretch of the test window. One instruction does most of the work here. Identify the single biggest weakness, not 10. If the critique connects back to the original research, something like, this only works because the market trended hard for most of the window, the tool access is doing something real. If it's generic advice that could apply to any strategy ever written, it isn't. Then one revision. Not a parameter sweep, not nudging a threshold 5 times until the curve looks nicer. Before touching the code, Claude writes down the observation, the hypothesis, the change, the expected effect, and what result would prove the hypothesis wrong. If most losses cluster in low volatility conditions, the hypothesis is that the strategy needs a volatility filter. The change is one added condition, and the expected effect is fewer trades but a better average trade. If trade count drops and the average trade doesn't improve, the hypothesis was wrong. And that's a real result too. Same market, same time frame, same costs. Run version 2 through the identical test. Return going up isn't automatically better. If profit rose but drawdown got significantly worse, that's more risk, not progress. Let me run the whole loop end to end so you see it as one system, not 6 separate steps. Tool connected, capabilities confirmed. I point Claude at the market and time frame we chose, and it comes back with a real analysis. Trend, momentum, volatility, regime, every line backed by a number from the tool, not a guess. Based on that regime, it commits to one strategy family and hands me the full spec. Entry, exit, stop, sizing, the exact condition where it stays flat. PineScript goes into the editor, compiles, gets added to the chart. Strategy Tester opens, and there's the first real number on screen. Profit factor, drawdown, win rate, trade count, all pulled straight from the test, not from Claude's memory. Results go back to Claude. It names the single biggest weakness, writes the observation and the hypothesis, makes one change, and version 2 runs through the identical test. Whatever changed, changed for a stated reason. You can check it against the prediction yourself, right there on screen. So, did MCP make Claude better at building a trading strategy? You're looking at the answer right now. Not whether AI can predict markets, it can't. Not whether this is a money printer, it isn't. The question was whether grounding the model in real data before it designs something changes what it designs, and now there's an actual result instead of a guess. That's the build. One MCP tool, one disciplined research to revision loop, and a strategy that had to earn every claim made about it with a real backtest instead of a confident paragraph. Every prompt from this video, the capability check, the research prompt, the strategy spec, the critique, the one revision rule, is in the companion guide, free, in the Alpha Cartel server. Link below. If you build this and run it on your own market, drop the result in the community. I want to see what regimes it actually holds up in. Standard reminder, educational content, historical backtests, not financial advice. Manage your risk. See you in the next one.